Hello everyone. Welcome back to our channel. If you're new here, I'm David, and today we're diving into an exciting topic that many potential homebuyers may not be familiar with: rent-to-own real estate. If you've ever dreamed of owning a home but thought it was out of reach, stick around because this might just be the solution for you. Now, you might be wondering, what exactly is rent-to-own real estate and how does it work? Great question. Let's break it down. Rent-to-own, also known as lease-to-own, is a type of agreement where you can rent a property with the option to buy it later. It's a fantastic way for people who may not have enough savings for a down payment or those who may not qualify for a traditional mortgage just yet to get their foot in the door of home ownership. Here's how it generally works. First, you'll enter into a rental agreement with the property owner, which usually lasts between 1 and 3 years. During this period, you'll be living in the property as a tenant. You'll typically pay an option fee, a percentage of the home's purchase price, which gives you the right to buy the home later. This fee can vary but often ranges from 1% to 5% of the home's price. A portion of your monthly rent during the rental period may be credited towards the purchase price if you decide to buy the home later. For example, if your rent is $1,200 per month, the landlord might agree that $200 will go towards the purchase price. At the end of the rental term, you have the option to purchase the home for a pre-agreed price. If you choose to go through with the purchase, the option fee and any rent credits will be deducted from the total price. If you decide not to buy, you can walk away, but you'll lose the option fee and any rent credits. Sounds straightforward, right? But let's look at an example to clarify things even further. Let's say you found a charming home listed for $300,000. You negotiate a rent-to-own agreement with the seller. You decide to pay a $5,000 option fee, which gives you the right to purchase the home later. Your monthly rent is set at $1,500, with $300 credited towards the purchase price. Here's how it plays out. At the end of the rental term, say 3 years, you've paid $54,000 in rent. Of that, $10,800 is credited towards the purchase price. So when it comes time to buy, your total price becomes $300,000 minus your option fee and rent credits. This means you would only need to pay $284,200 at the time of purchase. But what if you decide not to buy? You've enjoyed living in the home, but your financial situation has changed. You can simply walk away after the rental period ends, although you'll lose the option fee and any credits. Now, let's talk about some of the advantages and disadvantages of rent-to-own agreements. This method provides an opportunity for those who may struggle to save for a down payment or have less than perfect credit. You lock in the purchase price at the beginning of the agreement, which can be beneficial if property values rise. You get to live in the home and the neighborhood before making a long-term commitment. If you decide not to purchase, you forfeit the option fee and any rent credit, which can be a considerable amount. Rent payments can be higher than average since a portion goes towards the purchase price. Depending on the agreement, you might be responsible for repairs and maintenance during the rental period, which can add to your costs. So there you have it. Rent-to-own real estate can be a viable option for many aspiring homeowners. It's essential to do your research, understand the terms of your agreement, and consult with a real estate professional before proceeding. If you found this video helpful, please give it a thumbs up and share it with anyone you know who might be considering home ownership. And don't forget to subscribe to our channel for more educational content on real estate and finance. Have any questions or experiences with rent-to-own agreements? Drop them in the comments below. We'd love to hear from you. Thanks for watching, and we'll see you in the next video.